following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. A little more volatility last night. The Dow down 520 yesterday. Last night it rallied 280 points before correcting 170 of that, and now it's coming back to test the highs again. Looks like we're going to go up into the resistance area in the S&P somewhere between 1945 and 1955 would be my best guess. I think the best way to look at this would be to look at the New York Stock Exchange Index, because that is as clear as a bell, and we will take a look at that. But first, I wanted to cover gold because I had several questions about the gold market. As you can see, over the past 10 days here, we've been in a trading range from down around 11.17 per ounce all the way up to 11.48 that we hit, 11.47 that we hit yesterday, and now we're completing a little ABCD pattern here that should come down around 11.32. And as you can see on this chart here, that we've had some higher bottoms ever since August the 27th. We had another one again on the 31st, and that would line up with another one potentially today around 11.32. But anything below 11.32 would be rather negative in the gold, and I would think it could probably go down a lot less. I've been friendly to this market ever since we bottomed down around that 1076, but when we got up to 1170, that was a major place to to lighten up, because if the market had rallied $100 an ounce. And so what I would wait to see is what's going to happen here in the next day or two. Well, it'll probably be today, because this is a half-hour chart, and we could easily do it sometime today. But the key level is around that 1130 per ounce level in the gold is what I'm looking at. Now, the market that looks really interesting is the New York Stock Exchange Index, folks, because that is the clearest of any of the markets that we have. I know we have this propensity to be you really can't trade the NYSE, so you've got to trade the futures. But I want to blow this up so we can see it really, really good, because we had a really interesting spot yesterday here in the. I'll just give me a second here to put this up. There we go. I'll do the E-mini S&P a little bit later, but first I wanted to show you what the real market is doing. We had the ABCD form you see on Friday, which we were sort of expecting. That was the the super full moon. We backed off yesterday. That was the first day of the back off. We came down and we stopped exactly at the 61% retracement of the low from August 24th, and we stopped exactly at the 786 retracement of the low on the 26th. That was the retest. So that tells you that this market is still trying to go higher. So today's action is going to be key, because if we get above, if this market moves about 2.5% up today, this is going to tell us that maybe this market is not finished. That's basically the bottom line. This will be an interesting day with this test that we're having. So we'll see if this is going to be the case. But if we're really strong today, if we take back everything that we lost in the Dow yesterday, a person just cannot be bearish here, on the short term. Longer term, you certainly can be, but short term, I would think that would be enough to, to scare people, quite a bit. So that's, what I'm watching as far as the New York Stock Exchange Index. It was right at the bottom. You can stop and think how much the stocks were down yesterday. It was a tremendous selling, and yet the market didn't follow through today, which is a sign of some strength. There's no other way that you can possibly, count it, but other than the fact that there is some strength in the market. Now, give me 1 second here. I have to make it a slight adjustment because I'm covering. So darn many things that I can't put them all up at once. But I wanted to do this E-mini so you can get an idea of where we are. I'll go down to a hourly chart, and I believe you'll be able to see it here. The same type of action that we had. I've got too many lines on here. Just give me a second here and get rid of some. There we go. And this takes me a second to get rid of a few of them. You'll see the exact same thing that I was telling you about the Dow Jones. Let's try it again, Larry. The New York Stock Exchange Index did exactly the same thing. And as you can see now, we've had this little move off. We came down to the 786 of the low of back on the 26th. And that sets up a ABCD pattern that could easily, take us up here a little bit higher. In fact, quite a bit higher, all the way up to this area that I'm talking about, which is at 1955 level, is the level that I'm shooting at, that it possibly could get to. If you'll give me 1 second here, I'll be able to put this up, and you'll be able to see, the ABCD pattern that is there. So today's the really key day, so you want to watch that, very, very closely. Any close now below 1890, it's only 40 points away, and with the market jumping around, it could go 40 points higher, 40 points lower, without even batting an eye. So remember that these things do jump around quite a bit, and you just have to be prepared to see, what the next leg is going to be. But that's what's happened so far. We did come off quite a bit, about 540 points yesterday in the Dow. But again, we took back about about a half of that yesterday, about 270 points on the rally. Then we backed off a little bit, and now we're in this no man's land. Today's opening will be important because you've got the market opening higher. You've got people that are hurt yesterday. There's no question about that, and some of those might be selling a little bit in the morning, just maybe for margin call or whatever. Whether there'll be new buying coming in or not, I'm not really sure. But we still have this ABCD formation up here that could easily get to that point in still an overall bear market. But folks, if we get above that 1998 level in the S&P, I don't know what that number is in the Dow, but anything above 1998 in the S&P would tell us that we're going to rally even more, and there's a possibility that it could rally a lot more than we even could possibly, anticipate. But that's what we're looking at here early this morning. We've got the opening coming up in about 15 minutes, and every time we've had a sharply lower opening, we've had a interesting spot where there's a good time to buy. If it opens higher, it's a good time to sell. So we want to watch that. Now, I've had a request to take a look at one particular stock, and that doesn't happen too often, but we're going to take a look here at the stock of the eBay of China, and that is Alibaba. I've been following this stock long before it was ever listed here. I was following it in Hong Kong because Sarah traded the stock. And it's interesting, when the stock came out in October of last year, it opened sharply higher up in the 100 area. It dropped all the way down to the 75 level, where it made a beautiful 3-drive to a bottom pattern. We were following this, and this was pretty much what Facebook had done too. It made a 3-drive pattern and then had the huge run up. And I happened to type in there that day because there was 2 gentlemen on the tube at Bloomberg from T. Rowe Price, and they were talking about how they had loaded up at 115 in Alibaba, and this was a long-term holding that they were not going to vary from no matter what. And this stock was going to go to 400, and it's just all the bullish things that were involved with it. And I would love to know what happened to those 2 guys. I'm sure they're still employed, probably both got promoted, and they probably still have the stock in the portfolio because it's other people's money and there's no skin in the game. But look what's happened to Alibaba. After the high was made at 120, it broke all the way down, to $79 a share. It then rallied over a 3-week period to exactly the 382 retracement that came in at 94.17, and that sets up a perfect ABCD in this stock down at the 1.618 expansion, down at the 52 level. And so that's certainly a possibility of this. So remember, folks, there's a good example in this stock for two reasons. One is that you never know what the heck's going to happen with these things. You've got to make an educated guess on some of them, and that's what it is most of the time. So you have to be able to work with the risk-reward equation the best way you can. And since you don't know what the reward is ever going to be, no one ever knows that, the only thing you can focus on is the risk. So focus on how much money you're going to lose on a trade, not how much money you're going to win, and you'll be far better off. One of the favorite sayings that's from Paul Tudor Jones is that winners think how much money they can lose because they're always worried about their capital, where losers are thinking how much more they can win. And that's why, Las Vegas does such a wonderful job of merchandising with their big machines that are flashing and going, telling you can win $2 million, $1 million, whatever it happens to be. And the same thing with lottery. They're saying, you got 150 million, whatever it happens to be. They don't tell you that most people that do that, in fact, everybody that plays the lottery loses, except occasionally few people. But that's neither here nor there. So that's what we want to look at. Now, I had another question from someone that asked if I would take a look at the U.S. dollar, because there's been so much talk about that, and we still believe that the euro is heading down towards the level of par, which is 99. So what we'll do here is we're going to take a look here at the long-term chart of the U.S. dollar going back to 2001 when we were up at 120, and after that we came down into 2008. We bottomed at around 75. A few weeks after that, we had a few years after that, in 2011, our fearless leader was Mr. Tom O'Brien, and he was talking about King Dollar. And if you'll notice that ABCD Gartley pattern, it was a perfect ABCD. It was squared perfectly. In other words, from the AB leg is exactly equal to the BC leg. It's equal in time also, which makes it perfect symmetry. And from that level, which was around 75, I believe, in the Dow Jones, in the dollar index, we have gone up, for quite a bit. And now we've been in an area of correcting. Now, the correction started at the 100 level, and if you'll notice, that was an exact 61% retracement of the high from 2001. So that tells us that this is a really strong area of resistance. Should we ever get above that, then we are really going to have one heck of a move in the dollar. Now, if we look at it shorter term, and we're going to come up with a break here, pretty sure, and we will take a look at the rest of it as we get ready to take our break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're looking at the dollar index now, going over the last year or so, what's happened. And as you can see, we've had these ABCD patterns that have completed, and we did take out the lows of the past 6 months, and then we quickly rallied back to the 61% retracement of the move down so far this year. That came in at around the 96 and change level. So the dollar index has held up incredibly well, especially recently. We have only backed off just very slightly. That pretty much tells us that the euro, should be getting ready, to head down, and that since the dollar is, I believe, 53% of the weight of the dollar index, that will tell us that, the dollar index is most probably going to go higher as the move goes, as it goes lower. Now, part of this, thing that's happening in the world with China and everything is related to the deflation that has been going on. I've said all along, or I have mentioned many times, it's the 3 Ds. It's deflation, debt, and these derivatives that is going to cause the problem. And of course, one of the derivatives is quantitative easing, and we'll wait and see what happens with this. But this is we still have the deflation with us, folks. I mean, we're having a pretty good rally in crude oil. We rallied 10 cents, $10 a barrel. We backed off a little bit, and today we were lower, and now it's coming back pretty strong. So We'll see if this is going to be, just a little bounce in this market, or we're going to get something, a lot more. We'll have to wait and see. Silver's still holding up relatively well. I happened to speak to one of my old contacts who was one of my big hedging accounts in California. He's the largest supplier of coins and bullion in the Los Angeles area, and he told me, he said, it's really hard to get large quantities of small silver rounds. He said gold bullion is moving fast, he said, but the spreads that he has to pay are increasing, and with the price going down, he still has to pay more to get the gold, which he has to pass that on, to his customers. So, it used to be that the spread was about $15 a coin. It's moved out to about $22 a coin, and so it gets to be, quite a bit crazy. So, anyway, that's what he was referring to, and I'm still longer term. I'm really bullish gold. I think it's got a real chance. I just want to see, how it holds this time right here. And if we ever get above the 1170 area, then it's off to the races. That's what I think will happen. So we'll let the world tell us if that's going to be the case or not. We're going to be coming here to the stocks here pretty soon. We're going to open pretty strong, it looks like, and we'll see how much this rally is going to transpire here, and then we will go to the next one. We do have that ABCD up there. It was nothing more than a bounce back rally from what happened yesterday, and we'll see if that is going to be the case. We'll have to wait and see what's happening. Now, crude oil just made a 786 retracement. We ought to take a look at this for those of you like fib numbers here, and we'll see here. We just made a 786 retracement here in the crude oil. And so if you wanted a low-risk shorting opportunity, this is it. It's up around this level right here. So we'll see if it's going to hold that level or not. But with the wide-ranging bar that we had, went from 45, it moved $1 an ounce in one bar. So you certainly don't want to mess with that. At that point, you want to be able to, stand aside and not allow that to affect you, very much. That's the bottom line of what you're looking at when you're watching this. So we have the opening coming in pretty soon. Looks like we're going to open really strong here in stocks, about 200 higher, or a little more than several hundred points higher in the Dow Jones, about 30 higher, it looks like, 25 or 30 higher in the S&P, and about 40 or 50 higher in the I don't even remember what they call that thing, the S&P 500. So we'll see what happens as we open here relatively soon, and then we'll see if we get up to these levels, and we'll go from that section. Okay, now one of the questions someone asked me was about the chart of Apple. Everybody asked me about Apple. I don't know much to say about Apple other than, the day that it bottomed, it had a pretty good possibility of buying on that day. I believe it was around the 90, around 95 level or something like that. I don't remember exactly what it was, but we've just been, going sideways up and down here. We're trading at 110 now, so we're up a little bit. So we'll see if that's going to be the case. We'll cover AEM when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've taking a look here at the one of these gold mining stocks, AEM, and we are, as you can see, on the 24th, we came down and made a perfect 786 retracement down there at the 22 level. As long as that holds, this stock has a potential, to have a rally because you have a higher bottoms in here now. So the $64 question is whether we're going to hold this bottom, but that's what it looks like. If we take a look at this stock on a long-term weekly basis, you can see we've made new lows. Just give me 1 second to put this in here. You'll see that we made new lows here, but we really didn't go down very much. And so that tells us that they still have a possibility of buying. So this is a low-risk gold miner. If you're interested in one, AEM, that might be a Nico Eagle. I don't know which one it is, but it's definitely a gold miner. So it's still bearish. One of the things I wanted to mention to you folks is the fact that when you look at these, the countries that are related to these commodities that we're looking at, first of all, it's the Australian dollar is one of them. And as you can see here, with the Australian dollar, that we've been just coming down more and more and more. It just doesn't have any friends anywhere, and so it looks like we're probably going to. We had a little bit of a bottom around the 73 level, but since that time, the market, has continued to. Go lower and lower and lower. I don't even see any place for bottom in here. If we look at the long-term weekly on the Australian dollar, you'll be able to see that we are considerably, we're 180 pips beyond the 786 retracement, so you wouldn't even think about getting long this thing until we at least got it back above 7100, so you'd have a place to say that yes, this is a potential for a bottom to come in, but it exceeded the ABCD bottom on the downside, by a considerable amount. If we take a look at the Canadian dollar, which is also related to all these commodities because of its mining in oil and stuff, you'll notice now this is the Canadian. It's reversed because the Canadian is going down versus the U.S. dollar. As you can see, we exceeded the 786. We exceeded the 1.27. We exceeded the 1.618. And if we take a look at this on the weekly basis, you can see that we have gone up into new high ground. In fact, we're up 13 weeks in a row, which is really an outlier event in itself. And so we are pretty close to, I believe, a 1.618 expansion on the weekly. A little bit more to go. We got about another 150 pips to go in the Canadian dollar, and that'll be a 1.618 expansion on the weekly, which might give it some relief. But there's just no relief here in sight for some of these commodities. So keep in mind that that's what's happening, and nothing's really changed. Copper has made some type of a bottom, as well as crude oil and heating oil and gasoline, but overall, the grains are still coming down, and your other things, chemicals and tin and the other rubber, all these things are going low. The dry Baltic index is at levels it hasn't seen since 2009, but that's basically because there's so many extra boats out there, that ships that China built, and they are just floating out there with nothing to carry. So whether this means very much or not, we'll have to allow that to make up its mind here to see what's going on. So we've got market is holding up all right in here. Anybody that sold at crude oil sure should be happy, because it's moved about oh dear, how much it moved? About 70 pips already, which is good. All right, now let's take a quick look here at something else. We had a request for one other thing to take a look at. Give me 1 second to bring it up here, and we want to look at it, and that is the, this is from our good friend Jim Flanagan from GAN Educators, and he's done a lot of work, with bear markets and things like that. And what he's done is he's brought up a situation, or for the potential for what the market could possibly do. Now, this is Jim's. This is Jim Flanagan from GAN Educators in Los Angeles, and basically what he's looking at here are the potential moves that we could be looking at here. And as you can see, the most extreme one would be a 23% correction, taking us down near that 1600 level, of the move, and we should take out that October low. We haven't even come close to that as of yet, but well, we didn't come too far away from it. We got down to the 786 level. We got down to the 1830, but that's the possibility of what we could be looking at here, if in fact it's bearish. And I could be totally wrong, and that happens a lot. And let me explain to you. Well, no, I don't want to explain to you. I just want to give you some food for thought. Okay, if we just take the place. Let me play the devil's advocate here for a minute and say that everything that we've been thinking and that people have been telling us is wrong about what's happening to the emerging markets and everything. So what we'll do is we'll take a look at the emerging market here, on the daily chart, and you'll be able to see that it has been, pretty much cremated here. And let me get it up here so you'll take a look at it. And this could be where the canary is in my coal mine. And but if you look at this over the past 4 years, we have been coming down. We've dropped about 55% from the high to the low, and it looks very, very bad. And no, I don't think there's any question that the trend is down. And all we have to do now is, if we go to a weekly chart, we're going to see a totally different picture, folks. I mean, we really are. And I'm not sure this is going to mean much or not, but you ought to pay attention to it. We have, on that crash day, well, it wasn't a crash day, but on the big day down on the 24th, we made a perfect 61% retracement in the emerging market index. That was perfect. I mean, it went to 30.75. The low was 30.72. It was also a 1.618 expansion of the range from 2013 to 2014. We have to pay attention to that. And we had a better than 10% rally since that point, and we haven't done very much. But until that market goes below this 30.75 level, you have to treat it with I think a bullish bias, because it's a perfect ABCD. You made the perfect 61% retracement, spot on. And I'm not sure if the one from, let me double check, if that was a 127, then boy, oh my goodness, we have trouble in River City if you want to be bearish. Wow, look at this, folks. This is wow, I wish I'd have seen this last Friday. Okay. This is you've got 3 numbers coming in there in that emerging market. I'm going to have to do a special thing on this. This is a 127 expansion of the 2011 to 2014 move. It's a 1.618 expansion of the 2013 to 2014 move. It's a perfect 61% retracement of the move from November of 2009 to where we came up on August the 24th, which happens to be the anniversary of the high day in 1987. That was on the 25th. So this is something that must be respected. And the reason why is that if you're wrong in this, what you have to do is you've got to be able to say, okay, what have I done wrong? And that's what this is all about here, because I still think we got a chance here for a much greater move down because of these bigger patterns. But what could happen now is the emerging market could actually hold up with the rest of the world falling apart. That would probably scare the heck out of everybody, but it's certainly possible. When these things hit these numbers spot on like they do, you have to respect that. So we want to keep that in mind for what we see happening. So that's an important thing to look at. Now, the next thing I wanted to cover is the Treasury bonds, because we've had a pretty big break in the bonds. We're trying to rally back little by little. It hasn't been doing much lately, but we're going to take a look at it here. And we tried to make a small ABCD today, but we couldn't even do that. But we are forming on the bonds here. And I'll bring this up so you can take a look at it. We've got that situation that is very, very famous for Roy Longstreet, and that is the 135 pattern. I'm not going to have time to draw the 135s in, but I will draw the line in so you can see it. And you've got the higher bottoms. Each one happens to be a perfect 7/8 of the other. And so that's that's telling you that we could get a little bit of a rally, because we've broken down quite a bit from that 62 level. We came all the way down to 153, and 9 points. So rallying back 6 points would only take you up to the 158 level one more time if we can do that. But the thing is that stocks and bonds are dropping together. I mentioned that yesterday, that work from Todd Gordon, that when that happens, that is a very unusual event, but it does occur, because usually the correlation, and that's because money has to go somewhere. But in a situation that we have where we have deflation, that money just disappears, going to pay debts and whatever happens to it. But those are the things that we want to we want to keep in mind, on the bonds. The Treasury notes are looking pretty much exactly the same way. I'll put that up so we can take a look at those too, because that's the larger of the instruments, and we'll see. We've had no flight to quality of any kind this past week with the market, having these wild swings. No one really cares. Even the volatility index is, doing nothing. So there's no fear out there, folks. Even though there was fear one day, there's no fear since that time. So we'll see what happens, from this level. But anyway, that's what we're watching here with the notes and the bonds. We're down 8 days from the high, so we should be ready for a bounce in both notes and bonds today. This could be the first indication that we had that 135 pattern in the bonds. And we'll as long as that holds, that certainly should be a good bottom in the bonds. That would be my guess. At least for the bonds. We have one other question coming in here. If you'll just give me 1 second. Oh, we got a call from Lou from Nashua, I bet. Lou, is that you?
That's me.
How are you, my friend? What can I do for you?
What do you think about shorting the S&P here?
I don't know where it's trading. You want to tell me? I think the best place to short it, if you want to do it today, is somewhere between 1945 and 1955. That would be the closer number would be 1951. That completes the ABCD pattern that is there, and so I would say that's what I would do.
Okay, gotcha.
And then unfortunately, you have to use about a 20-point stop given the volatility that we have, Lou. If you can't do that, either scale down your size a little bit, or try it, in 2 increments of, use a 10-point stop and then try another 10-point stop. But I don't know how you can trade it for less than 20 points the way the markets are jumping around.
Right. How about shorting gold?
Well, I can't short gold here. The reason why is I'm too close to the place where it should hold, and that's around the 1132 level. I would love to have sold it the other day up around 1148, but we didn't quite get there. So I don't see anything to do. The easier trade would be to buy the bonds, and that was the one I thought was probably the easiest trade to do, so far today. And then I was trying to sell crude oil up around that 786, but I don't see anything to do in the gold here. I would just wait for a better opportunity. And I'm not sure whether it would be a long or a short, but I'd wait for a better opportunity.
Great. Appreciate it, Larry.
I appreciate it. Thank you for calling in, Lou. That's Lou from Nashua, New Hampshire. Okay, folks, we'll take a look here, and we'll see how much strength we've got here. We got the market shucking and jiving, backed off a little bit. We'll see what's going on. We've got crude oil backed off almost $1 a barrel from that 786. And then we'll see what's happening, and then we will go from that level. We did have something happening while we were gone here. Just give me a second here. I've got to pull this up. I wanted to show you the euro because we had a real interesting pattern form right during the time when we were watching these things, and the euro made a really nice ABCD pattern down at the 1222 level. Now this has got a few too many lines on it, but it looks like it's holding up okay. It's moved about 20 some pips so far in the right direction, and we'll see from that. Now someone was asking a question about the gold, and I don't see anything really significant happening with gold. We rallied a little bit off of that bottom. We rallied about $5 or $6, but I don't see anything there at all. So I would just hang on and wait and see what happens from that point.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I've posted in the chart that we started the show. That's the hourly chart, the New York Stock Exchange Index, showing the ABCD into the super full moon on point D. We backed off yesterday to the 786 retracement of the low on the 26th. It's also a 61% retracement of the low on the 24th. If we close lower today, if we go below that low that we made yesterday, the New York Stock Exchange Index, that is extremely bearish. And until that happens, it isn't bearish. That's the bottom line. So that's the way it looks from the cheap seats here in Tucson, Arizona. So remember that these markets have a tendency to extend themselves. A lot of different news items come out that make the markets move, whether they're right or not. You don't know. We never know what's coming out of Asia for sure. And Asia has actually held up relatively well, given the fact that the volatility that we had yesterday. Asia didn't do very badly at all. It was down, but just less than a 0.25%. So it was very, very small. So right now, we're still in this bullish mode here. And the $64 question is where we close today. That's going to be the key. And I will say this, boys and girls, if we close badly on Friday and we're anywhere near the lows of the 24th, you do want to be short over the long weekend. Do not be long. But if we close very, very badly, and I don't think we're going to take out the lows of that between now and then, because we've only got 3 days to trade, my guess is that we would be looking at something really, really sinister down there if we close badly. But that is if we close badly, because if we don't close badly, it don't make any difference at all. Not much I can tell you. Okay, boys and girls, I think we're getting close to the end of the old clock on the wall here in Mr. Rogers' office. Says we're almost done. One other question was about the Japanese yen. Folks, I don't think anything is happening with the Japanese yen. I'll give myself a few seconds here to see if I can post it. But as you know, it's one of the ones that has the larger things that happen with stocks. And all we've done is, you can see we made the 61% retracement, and then we just made a 50% retracement on the upside, or on the downside, so nothing is really happening. The close today is important, folks. A bad close, we go down. Good close, we go up. That's the way it looks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.